I'm giving you a simple forex trading idea here that you can use to increase your success or to manage your losses if you are currently losing a lot. So what I am going to do now, I'm going to talk about this moving average. You can see this red line on my chart, okay, and I'll also talk about the technicals versus fundamentals. So here is what is happening. As you can see, the moving average, my moving average, I'll go to indicators list. You can see this is my moving average, period 14, shift 0. So what happens here with this setting, guys, is that when you say period 14 on moving average, this period, you are simply telling moving average to use the information from the previous 14 candlesticks. I understand. Let's say it will count from here 1, 2, 3, 4, 5, 6 until where there is 14. Then this information here will be implemented according to all these previous 14 candlesticks, okay, and apply to close, meaning that after candlestick close, the result will come out. The shift, it means that those who are programmers, they will know this thing. The shift is the numbers of candlesticks that your moving average will conclude the decisions from. For example, let's say after the 14 candlestick, let's say the 14 candlestick is here, okay. So after all these 14 candlesticks, moving average will make a decision on this candlestick. Is shift 0. This is candlestick 0, okay. This is candlestick 1, 2, 3, 4, 5. So actually when we count candlesticks, we start from 0, okay. Every candlestick, when you are counting candlestick, this is candlestick 0, is our current candlestick, okay. Current candlestick will always be 0. So if you are putting 1 here, you will simply say the moving average must use the information from this candlestick to conclude here, okay. So obvious simple moving average is just the previous 14 candlestick, no anything involved. It's just a simple, it will just count these candlesticks and then give you the result, okay. You can see after it counted all these 14 candlesticks, including these ones, the moving average concluded that this is a sell, okay. As you can see here, it concluded that the market is selling, okay. So another thing that we must look at is this exponential. This one simply means that it will also focus mostly on the current candlesticks, okay. It won't just count the candlesticks only, it will use the information on the current candlesticks, let's say 3 of them, on what is happening, okay. So I'm sure a lot of you just use simple and exponential and all those things. So as we go in, I want to show you what's happening and how to use this thing in your system. You can just add this thing, it won't work alone, of course. So let's begin here. As you can see, as soon as the moving average changed the direction, okay, market also changed the direction. You can see here it never changed on this candlestick, and indeed the market never changed. Market began changing when the moving average also changes. Here you can see if moving average changed here, okay, and after it changed here, the market never changed immediately. The market continued to go up, but then finally the market changed, okay. Meaning, in fact, yeah, this moving average was forward, was ahead of the market. Okay, the moving average. Those people who are saying the candlesticks are nagging, I don't know where they are trading. Actually, I don't know where are they getting this information, because now you can see we have a chart here, and you can just see everything. You can see even here the moving average was ahead of the market. Okay, this thing crossed before the sell trend began. Okay, and then here you can see the market was going up from these candlesticks, but the moving average never moved at all. It kept on going down until it was convinced indeed that the market will go up. Okay, so you can see again as we move that the market was actually below here, was below moving average. Market was selling, but what happened is that the moving average crossed here. Okay, the moving average crossed here. I can say in this one, this thing happened the same time, but mostly you can see that the curve began on this candlestick, this bullish candlestick. Okay, and then it went up. The same thing, if you can check here, moving average showed you a sell before the market sell. Okay, and then now you can see currently today, as you can see, the moving average is still showing you a sell. It never crossed yet. So by chance, if this moving average will keep on showing you a sell, and then you start to see this market going down, also obviously we are selling Euro USD from today. Okay, those people who are saying actually I want to advise you about this. This thing is so much important, especially if you are just starting or you have been in forex trading for a while. There's a notion that is going on, and people are saying the candlesticks, what they are putting this, the indicators are nagging, the indicators are useless. And I will tell you something, those people who are saying this mostly are those people who want to teach you something, or they want to sell you something. Mostly there are those people who just want to look smart and genius than other people. But and they are simply saying this because they don't want you to use your tools. They want them to say they will give you something, some magic or some strategy that is a secret, top secret, which which is just the same thing. I mean, you have your tools in your phone. These indicators, they are there in your phone. So they realize that if you can use these things, you won't need them. You won't see them as smart as they are claiming. And most of them, they are using these things behind the doors. Okay. And you have the professionals on DSTV, on everywhere. You have professional forex traders using indicators. Okay, because these things were made by mathematics. Okay, these things were made by people who knew what they were doing. And I'll tell you something, candlestick is more this indicator is more adaptive than normal trend lines. Okay, it's more adaptive. It adapts to the market. For example, let's say even if I can place a trend line here, okay, let me try to show you something. Okay, you can see this is my trend line here. As the market moves and changes, this trend line becomes useless. I have to remove it, and then I have to place another one. And the funny thing again about this trend line is that the information that is here is not stored. I don't know about this information, but this indicator alone, as it moves, this information that is here and here is already inside this indicator. Okay, this indicator already recorded the information. Okay, so whatever that these indicators does, they refer the information from these candlesticks. Okay, so these things become so smart if you know how to use it and if you understand how it works. Okay, so those people who are saying these things are useless is because they don't want you to explore more. They don't want you to play with these things, because if you can place these things on your chart and play with them more, you will start to see a lot about forex market. You will start to understand a lot about what is really happening in the market. Like for example, you can go on and change the periods here on this indicator. You can go on and change the period. Even if I'm not using this indicator to trade, I can just say I want to see what happened. Let's say today it's Wednesday. I may just say I want to see what happened in just 2 days. Okay, and then you will just count how many candlesticks per day and your hours here. Let's say you know that it's 12 hours per day. Today we only had 12 hours. You can just put 12. This is hourly time frame, and then you know indicator will only count 12 candlesticks, then gives you a analysis. Okay, after that you can see my indicator is changing, and it shows me that the market is straight. As you can see, this moving average, once you see this, it obviously tell you that we may have a consolidating market from here. You can see this is straight, and I've done this by just counting 12 candlesticks for today. You can also change and count for weeks. Actually, you can use this thing to give you a classified, the very important information that a human being won't give you that kind of information. Okay, and then you can see here, as you can see this moving average moved straight here. It's the same thing here. This moving average is straight here. So we can simply say whatever that happened here will also repeat here. Okay, whatever period that you are going to use and the period that you will feel comfortable about, you will get the most important information on the market. Okay, I'm not saying use this thing to make your decisions, but you can use it somehow, somewhere. Okay, for example, we all have lot of us have phones. Some of them are using phones to watch porn, some are using them to watch Bushiri preaching or Pastor Chris and all those things. So everyone, we all have this tool, but we're using it differently. So the same thing that I will tell you is that please make yourself comfortable with indicators. Okay, you will find a lot of information, and you may find that your trading improves and you will make your trading fun and simple, because now you have the tool, the right tool. You can use it anyhow you want, and you can just pick an indicator in the chart just to see how it shows you information and all those things. For example, I'll show you something. There's no line that you will tell me in price action that will tell you that the market will consolidate like this. There's nothing that will show you that. Nothing at all. These trend lines, zones, whatever, they will never show you this kind of information that the market you are entering now is consolidating. It may consolidate, okay? But with this, as I'm telling you here, this is more likely to consolidate. As you can see, this moving average, okay, from 12 previous candlesticks, it's telling us that the market is not on trend yet. Okay, and there's no way you can get this kind of information. I'm not using this information to trade, but for example, I'm only using this information to analyze certain things. Okay, there are a lot of things in the market that you won't see with your eyes, so you need these things. Okay, I'm not recruiting you to, but if you feel comfortable, why not use whatever you're using? But you are making your life hard. I mean, in a year, how many lines will you put on your chart? Of course, you must sometimes put lines, but I'm not saying uh, you must actually enjoy a forex market. You must enjoy these things, guys. Okay, enjoy these things. They have placed the tools on your MT4. You can play with these things, and these things are so much adaptive. They move with the market. Okay. Uh, and again, I'll show you something. As now, this is my trend line, and I can create a channel here. Okay, a very nice channel. Whatever channel that I will create here, I may never get it back in the market for years and years. Okay, but what the indicators is doing here, it will also do this maybe tomorrow or another day. You can see the same thing happened. This thing here, you can see it happened here. So it stores the information and solve problems that you want to solve. Okay, so as I'm going forward, I want to talk about the issue of fundamentals versus technical analysis. I've seen a lot of people fighting over this, and some they are saying I'm a fundamentalist, some they are saying I'm technicalist. Okay, the same thing about the naked chart and indicators. And what I will tell you is that a lot of people who are saying those kind of things are either lying to you or they are doing some sort of marketing on top of whatever they are saying. They are trying to be unique or same thing, seen as a genius, as if they have some information that you don't have or some secret that you will never have until you ask them that information. And they are really lying in most cases. For what I'll tell you now is that technical analysis is about how the market moves. Okay, fundamentals is where the market will go. Understand? Fundamentals is always about where will this market go. Okay, let's say the economy of Europe is strong against the one of United States. The market will surely go up. We all know that the market will go up because the economic landscape is strong. But another thing that we really need to figure out is how the market will go up. It will go up, of course, but how will it go up? It will go up in which way? How? Okay, we are going to Joburg, me and you. We know that we are going to Joburg, but how will we go there? Which road? How many cabs will we take? And that is where technical is so important. Okay, technical analysis is so important in that way, to say it's a buy, but how will this buy go? Okay, how will this market buy? It won't just go up. It will have some sort of retracement. Sometimes even the consolidations, which may take days and days, and you won't have patience to wait for these. And some of these moves, like these candlesticks, may take you out with a stop loss, but you are right, it's a buy. Then you cry and say, after the market blew my account, it went into my direction. After the market took out my stop loss, it went into my direction. Okay, so it's very important to learn both of them and to understand both of these things. And I will say this because coronavirus also taught us a lot. We learned a lot with coronavirus. Okay, it showed us that news matters. Coronavirus taught everyone that fundamentals matters. Okay, and when I'm talking about fundamentals, we must not only talk about the unemployment rate will be released on Friday on 10 a.m. We must include everything. Okay, the news are coming out every day, and these news, some of them you may not know them because you didn't see them on your calendar, but as much as the journalists are presenting news on TVs, news are also, those kind of information is also affecting forex. Like you can see a big candlestick like this, and then you don't know what they said on CNBC, okay, or on some news channel. You don't know what have they said, and then this happened. And mostly we know they will first, if you watch news on TV, you know they will first give the heading about what will they talk about. So if you are there in front of the TV and you can see that they want to say something about USD, you may just react, take out your trade or something. So let's say now we have two people. We have person A. Person A is someone who uses fundamentals only, and then we have person B who uses technicals analysis also. These people may all fail, all of them, on different paths, different strategies. They may all fail, and I'll show you how. For example, the market is here. The technical analysts have realized that, okay, this thing is a buy. All right, I'm going to buy this market now. And then as soon as the market comes here, he places a buy. Okay, as soon as he placed a buy here, the news comes out, something comes out. Okay, as something comes out, the market takes him out with the stop loss. Okay, or his account was small or something like that. Okay, or actually, let's say, of course, a lot of technical analysts are using the trend to trade. Okay, you wait for some sort of retracement and all those things. So as you took your buy here, the market goes against you. Let's check how many hours. 1, 2, 3, 4 hours. You are in a loss in a 4 hours. Remember, this is 1 hour time frame. In a loss 4 hours, the whole 4 hours in a loss. Okay, you may give up along the way or say I was wrong with this trade or some of the things, and then the same way the news may come out, okay, to say Euro USD is a buy. Okay, but at the end of the day, there are some zones where the market will make a turn or the market will react. For example, here, as you can see here, we have this resistance here, and let's say as the market went here, news came out to say Euro USD is a buy. So as the market goes to a buy, when it came here, it reacted to that zone to give a false reversal signal or something like that. And if you only care about the news, and then these candlesticks came after you, obvious, these candlesticks are about the technical rules. These two candlesticks, I can tell you, this is not because of the news or anything. It's just technical rules. Okay, there are people who have placed their hopes here on this zone. This is a technical zone. Okay, the market is always likely to react here, no matter the news. Okay, so the news says Euro USD will go up, but we don't know how will Euro USD go up. It won't go up straight. There will be some technical reasons along the way, and when we talk about technical reasons, sometimes we talk about the take profits, the stop loss hunt, and all those other things that you must know as a forex trader, and you must never ignore them. Okay, the same thing, you are a technical analyst, you are here and then you see a sell pattern, something like that, whatever you see, and then when you, after you saw that your sell patterns or structure, then news for euro comes out with the positive employment rate or GDP. You can't avoid those kind of news. Then the market goes up, and then you start to cry. They have the market is manipulated or all those things. You can see how this market went up, struggling. It struggled, but at the end of the day, it was a buy. It ended with a buy. So you need these two things. There's no way you can take out fundamentals out of forex. There's no way. And there's no way you can take technicals out of forex. I don't know how people came to their conclusions, but there is no way. If the euro USD is performing good economically, then obvious euro will be strong if euro is performing good. But again, I will tell you that technical analysis mostly have the advantage over all these things. Okay, you must know fundamentals, but I will say I will also ask you to, if you don't have time or you want to take some shortcuts, or you want to master mostly the useful information, technical analysis have more advantage over these things. Of course, what you will have to do is to avoid the news. You will have to check them, and you will have to understand them. But technical analysis mostly have advantage over these things, because technical analysis is mostly about following the market. So for example, I know that once someone pass at Pretoria, that person is likely to go to Limpopo. I may simply guess that no, you are going to Limpopo because you have passed a Pitori, meaning you are not going to Pretoria. Okay, you can guess those kind of things. Okay, but sometimes it ends in tears, especially when serious news comes out. So you will focus on your technical analysis too much, but you must also understand fundamentals. You must be aware when the fundamentals are coming out, special fundamentals that may take you out of the market. Strong fundamentals, high impact news, then you stay out, or after those news came out, you look a position that will go with those news. If you see a pattern that is opposing that strong news, you don't even touch it. You don't trade that kind of pattern, because fundamentals mostly are the reason why the market is moving. But then how the market moves depends on technical analysis. Okay, so you have all this information about how the market will move, but when you realize that my technical analysts are telling me that euro USD would be a buy, but I can see that no, the news are not reflecting this, then you just stay out. Okay, because sometimes when there is a no balance between, let's say, no correlation between fundamentals and technicals, that's where you find the market not moving mostly. And sometimes those things happens when the news are contradicting each other. Okay, so the reason why I'm also saying that you have more advantage on technicals is because on technicals, you as a trader will see what happened previously. Remember, technical is about what happened previously, and the same with the fundamentals. Fundamentals are also reflecting the past. For example, we know that if we can have a low GDP in South Africa, and then we have banks decreasing interest rate because of inflation. And then we are mostly likely to know that unemployment will be low. And if that thing can happen for 2 months, we have all this negative news about South Africa. So obviously we can keep on expecting bad news about our unemployment, GDP, and all those things for almost a year. It's a trend that news also trends. If you can open a graph of unemployment in South Africa, you can see the trend. It's either the trend was going up or the trend was going down. Of course, it will change somewhere. And wherever it changes, let's say you are taking a loss if you are trading a trend of news. Like now, we know in South Africa, unemployment is consistently rising. And then the next time when the unemployment rate of South Africa comes out, you can just uh, place your buy on Euro USD. The chances of you losing are so small because you are in a trend. Okay, even if you do lose and always do that, most of the time you will win because we are in a trend. Okay, like our GDP is dying always, and it will surprise me when rand GDP comes out. People sometimes expect a positive news. I mean, you can't expect positive news from those kind of things. And another thing is that if you can go to your fundamentals history and go to technicals, you'll see that these things are working together. It's just that people don't want to work together with them, but these things are working together and people are trying hard to separate the two. Okay, and then we have a situation where we have positive news, but the market is not reacting according to the news. If you can dig little deeper, you will find the reasons for that. Okay, you will find certain reason. For example, I will tell you that let's say we already know that America is losing a lot economically. It's losing a lot, and then we are already selling USD, and then by the time those news comes out, I don't think they will make too much impact because that is what we already know. Something that we already know. Okay, we already know those things, and this mostly happens because the website have the forecast, they have those kind of numbers which makes people react a lot before the actual release. Okay, so what I'm advising you guys now is that use whatever that you have. Don't feel ashamed. The person who's using indicators is not stupid or all those things. Okay, it's like saying the person who don't use planes is smarter because he can just take a shortcut, he can just run to foreign countries. It's so stupid. Okay, use whatever that you have, and the more you use tools is the more you will improve. And the same people who are saying indicators this and this, they will also come to you asking you, how have you done this, how have you done this, because you are utilizing the tools that are available to you. The same way I can say these indicators are just like those things that they are allowing us to trade with certain amount and so forth. Okay, so use these things. Okay, it's just the same thing as leverage. You have the leverage to use, but you are avoiding use it. Okay, use advantage of these things. Of course, my moving average may not be the same as yours, and the reason for this that I know what I'm trading. I know my time frame, I know my preference, and you know your preference. The danger is now when I'm using 14 period moving average, you also want to use 14 period moving average. I'm using 14 moving average on H1 and you want to use 14 period moving average on M50. That's where we have a lot of confusion. But if everyone can find this time frame and then do a research or focus on, put the indicator on the charts and try to observe how this indicator react on this time frame, which the period using you can change those things that are allowing you to change them so that you can change them. They are not allowing you to change those things because maybe they are just doing it for doing it. They gave you those things so that you can be able to change them according to what you need. I see a lot of people love 200 moving average. They will be saying everywhere you go, you'll see 200 moving average. But what is fun is that they are using that on small time frames mostly because they don't know. And what I've realized with my experience is that those people who are using 200 moving averages are the professionals mostly who are using bigger time frames like D1. Some are using those on H4 maybe or weekly, and because 200 moving average is, this indicator is going to calculate all previous 200 candlesticks. So if you are going to use all previous 200 candlesticks on small time frame for a short term trade, I don't know, I don't think you are doing a smart, you are taking a smart decision. Mostly I would say if you are a scalper, reduce your periods. If you know that you are holding trades, of course use a period that is suitable to you. Okay, so I give you an indicator saying I'm using whatever moving average, this and this, and then you jump to the indicator but you don't use my time frame. Okay, then you are mostly gonna lose. Okay, so another thing guys, forex market changes all the time, so we must always be on the chart updating these things and trying to see where are these things going wrong. Okay, we must always be checking these things, and also on the fundamentals issues we must always be watching that no unemployment is no longer having that more impact, but mostly we must try to find out why, so that when that reasons disappears we know what to do. Like example, now I'll tell you, last year we never had a lot of impact about the news, and the reason being that people were no longer focusing on the actual numbers. Everybody knew that as long as there's coronavirus, unemployment rate will go down, unemployment will be worse. Okay, will go up, will be worse. The GDPs will do this, the loans and consumer goods, or we already knew those things according to coronavirus, and so people were no longer focusing on those data. People were focusing on breaking news. They wanted to hear South Africa is opening the economy, then they jump and buy ZA. Okay, those are the reasons. That's why we must always be updating ourselves. And if you understand something, you will be able to adapt to the situation. Okay, like for example, last year there was no one who would have been surprised when GDP goes down, or when NFP, those guys at USA refused to invest in the USD, because they were also trying to manage the risk. So we had a very bad NFP last year, all the time. NFP whatever meeting. Okay, so what happens is that you must learn how the forex market works, both on fundamentals and then both on technicals. Okay, you must understand these things so that when something happens, you know. Like now we may say the corona is going to an end, but it may come back even worse. And then when it comes back, you already know that this time I'm no longer gonna focus on those planned news. I'm not gonna check those NFP things and stuff. I'll just wait for the country that is showing the progress in dealing with this pandemic. Even after Corona, we may have another thing, Ebola or whatever, we don't know. But then what I'm saying is that you must learn these things, you must learn to understand. Okay, don't just take Ronald spoke about the moving average. His period was 14, and then you take this thing, put it in and say, when it does this I do this, when it does this I do this. No, you must understand why. Okay, as I've explained, you can see I've explained to you that what are these things doing. Okay, and then it's your job now to go here and play with these things. Put this on your I'm on USD. You can put this thing on your own currency, your favorite currency, and check how it behaves. You may find that the 12 moving average is good for Euro USD but bad for GBP USD. Another reason why, because Euro USD and GBP USD are not behaving the same. So you can't expect copy and paste for this indicator. Okay, so you must do these things, do your homework, work on your charts, because now the reason why those people, they are saying to you those indicators are useless is because they want you to be like this on the chart. What will you do on your chart if there's nothing here? All you are seeing is these candlesticks. What will you do here? How will you figure out how does the market works? So they just want to paralyze you. They want you to be helpless. Okay, they want you to be helpless. Sharp guys, subscribe and like so that I can keep on producing more videos for you. Okay, sharp, until next time.